The euro rises this morning, even though Marine Le Pen's national rally secured one vote out of three, as expected in France. The European futures are positive in the early hours of the trading week, a week that will also see the Brits head to their general election on Thursday. But expectations there are somewhat different. So welcome to the new week, to the new month, and to the second half of this year with Swissquote's Daily Market Talk. So yes, mesdames et messieurs, the first round of the French legislative election went totally according to the plan for Marine Le Pen's National Rally Party, which finally secured one vote over three in France and became the first far-right party to top the legislative elections in France. And, well, the participation rate hasn't been this high since 1997, apparently. The New Popular Front, which is the alliance of left and the Greens, won 28% of the votes, and Emmanuel Macron's party posted a miserable 20%. The second round of this legislative election is due next weekend. Now, the knee-jerk reaction was a jump in the euro in the early week trading. We saw the euro-dollar jump past the 107.50 level in Asia. The euro-pound flirted with the 0.85 level, and the European equity futures are trading in the positive at the time I'm talking here as a buy the rumor, sell the fact reaction to the election outcome from France, and also on chatter that National Rally may not secure an absolute majority in the second round of this election that's going to be happening next weekend. But let me tell you this, there is a big chance for Marine Le Pen and Mr. Bardella to win the parliamentary majority next week, and that risk will unlikely let the euro run too high before we have more clarity on the French election outcome. Now, I guess many of you out there probably ask why on earth investors don't like Marine Le Pen? What did Marine Le Pen and Mr. Bardella do to the markets? Well, it is nothing personal, really. I can assure you, it's just that a Le Pen majority in the French parliament increases the chances of seeing the French fiscal spending explode and further boost the country's budget deficit in the short run, which is already seen going past the 5% mark of the output this year, whereas the limit allowed under the European regulation is just around 3%. So the latter would have a widening effect between, well, the French and German yields, for example, and, well, that would weigh on the euro's valuation. That's the mechanism. It's just math. So the spread between the French and German 10-year yields have already topped 80 basis points last week. So this is a level that has not been seen since, well, the European sovereign debt crisis back more than a decade ago, remember? But that widening yield or that spread could go much higher, and a Le Pen majority could revive that demon. So this is the worry in the market. On the other hand, well, there is a more optimistic scenario as well, which is that a total or a partial Le Pen rule may not be as catastrophic as many think it would be, as Meloni hasn't been as bad as expected for Italy, for example, in terms of financial matters. So maybe, but just maybe, tensions in the European markets and the euro due to these French election jitters was just a blip. But if you ask me, I don't really think that is yet time for the euro or the French exposed European assets to rally. It's better to wait probably for the final outcome of this legislative election in France next week. Now, across the channel, the week starts with an increased election vibes as well in Britain because, well, Brits will also be headed to their own general election this Thursday with, however, very little suspense on the horizon out there because, well, Rishi Sunak's Conservatives are expected to lose big in this general election. The Labour is seen winning the election, but together these traditional parties are expected to see a historical blow to their, well, combined support, and the whole political chaos will probably give Nigel Farage their quite right candidate to shine finally. Now, the British markets have been surprisingly calm and relaxed into an election that will potentially change the political dynamics in the country. But the past decade was so harsh, but so harsh under the conservative rule in Britain with Brexit, the pandemic, the energy crisis, and Liz Truss that even investors who normally prefer Tories over the Labour, are today happy to see Tories leave. So JP Morgan, for example, says that a Labour win in the UK will be a net positive for financial markets, and it would benefit to banks, to home builders, and to groceries the most, while everyone out there thinks that a Labour win will be a net positive for the British pound in the longer run. In the short to medium run, however, a Labour win is broadly priced in. So the return of the Bank of England dose eventually following the election jitters could well keep the pound under pressure in the short to medium run. Now, cable trades around its 50-day moving average this morning at the start of this week and may not clear the 1.28 offers even when the election dust settles in the UK by the end of this week. Now, speaking of elections, well, US President Joe Biden's less than ideal physical condition at last week's presidential debate against Trump raised questions about his age and on whether someone this old, I mean literally this old, should rule the country and the world. Biden says that he will stay, and his persistence, well, gives Donald Trump a super advantage in my opinion, and I don't really understand how Democrats don't see it, but that's another matter. But in fine, for the US, I think that Trump's return to the White House won't change a big thing, really, because Biden, well, carried on with the trade war that Donald Trump had started against China back in 2018, remember? Then Biden likes spending, and well, Trump likes spending as much, and Donald Trump will reinforce the onshoring and bringing as much business as possible back to the US. So beyond very politically sensitive subjects that are not a subject for financial markets, I don't see much changing from a market perspective. So investors will obviously keep watching the economic data from the US and the Fed expectations. So in the sense released on Friday, the core PCE slowed as expected in May in the US, while personal spending fell short of expectations. So combined to, well, Thursday's soft GDP numbers from the US, last week's economic data from the United States was supportive of the Federal Reserve dose and rate cut expectations. So the S&P 500 hit a fresh record on Friday but closed the session in the negative. But zooming out and looking back, just a little bit back, the S&P 500 and Nasdaq 100 had a stellar first half of the year thanks to the extension of the technology rally. Now, as we always say, it would be healthy to see this rally broaden to other sectors, because as the technology stocks rise and the rally narrows to just a few technology names, the risk of sudden and sharp sell-offs increase because, well, the diversification is naturally less. So according to Bank of America, the algorithmic trading models boosted their exposure to technology stocks to such extent that the stop loss triggers became very tight. And in numbers, the commodity trader advisors, so these automated trade models, can start unwinding their long positions when the US futures drop 2.8% or more, while this threshold was at 4% a month ago. So in plain English, this means that the margin for a misstep becomes narrower and the risk of long squeeze rises as the major US indices travel through uncharted territories on the, well, shoulders of just a few technology names. So this is all for this Monday and for the first day of this new half. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.